live. I'm hoping that all of you can see us. Hi everyone. My name is Uvamila. I'm the CEO and co-founder of Plan A. Today we're talking about corporate sustainability and carbon accounting, any of these questions that might have been heard from many of you in discussions internally in your company or elsewhere. The reason why we're doing this event is because, and why we started actually the series is because there's been quite a lot of questions coming our way, more or less the same ones. And it feels sometimes like we need to work towards making sure that the education on the topic increases and also everyone is obviously clear, and we can move forward in making sustainability a commonplace in any company. So today what we're going to be doing is working on explaining these concepts, and the first step that we're going to take is that we're going to cover the most common questions. It's a very basic intro to sustainability today. We're not diving into all the most complex issues, and we'll do this in the next sessions. This live is going to be happening on a monthly basis, so today is one of your chances, but there's actually going to be quite a few more that you could be joining. And I hope that if you are having questions now, you can add them to the chat, and you can basically put anything. You don't need to worry if you're not necessarily really an expert on the topic. That's my job to be able to help with that. So what you're going to be seeing in the chat is some of the questions that we get a lot. Some of my team members are going to be adding them there, and I'm going to be covering one after the other. In the meantime, I would love to know, because I see we already have quite a few people online, to know where you're joining in from, and also how much of an expert do you feel yourself to be from 1 to 10 in terms of sustainability. So they're waiting for us to get some answers to the question. The first question we're going to be starting with, which I'm seeing, okay, Berlin, planning office, amazing. There's obviously people joining from the team. The first question that I'm going to be starting with is related to CO2. I think one of the common misconceptions in our discussions with many clients is that CO2 is the only greenhouse gas that is out there. Actually, there's a few more. But CO2 is definitely one of the most important ones on our planet, because plants use it to process what is in the process of photosynthesis. To put it a bit in context, why we always talk about CO2 emissions and so on is because if you take a country like the US, 80% of its emissions are actually carbon dioxide. And then methane is 10%, nitrous oxide is only 7%, and then you have some other gases that account for the rest of the emissions. So if you look at this equation, that means that CO2 is a crucial one to look at, and it's really the most important linked to global warming. As CO2 builds up in our atmosphere from burning fossil fuels, it has warming effects that could change the Earth's climate, and already, unfortunately, are changing the Earth's climate. Scientists have been detailing actually records of atmospheric carbon dioxide that go back 800,000 years. So we really have a lot of evidence that shows us that there is a problem that is related to CO2. And CO2 builds up from a lot of the activities that we do as a society, as an economy, as different organizations that are kind of producing things, traveling, and so on. Moving on to the second question that I'm assuming is quite important for many of you is also like, what is sustainability? Sustainability is now becoming, especially in the groups of people working in the field, not necessarily the most favorable word, because it's just so overly used. And in some contexts, it's out of definition, out of really meaning. So if we want to put the record straight, sustainability is essentially the balance between environmental health, social equity, and economic development. We have a lot of different definitions for that, but if you look at just this broad one, we're looking into really a balanced ecosystem, also balanced society, as well as one that looks into its economic progress, but not at the cost of all the other elements related to humans and planet. There's a really interesting quote that it gets to be used over time. It's about the fact that sustainable development is development that meets the needs of the present without compromising the ability of future generations to meet their own needs. That is a good way to sum it up in terms of what is the future, what is this development that is confirmed by the mindsets of sustainability. As a company, us in Plan A work towards building this sustainable future, and this is why we have this balance between people, planet, profit in the way we do our work. Why this matters to any company actually is because it really allows you to be in line with the needs of your employees, your stakeholders, also the planet, but also allow yourself to really be a prominent leader in your industry as well. I'm not seeing any questions from you yet, so please feel free. I see we have quite a lot of people that are listening in the live, so please feel free to add your questions. Don't be shy. There's no judgment if you're new to the topic or your question is maybe not so necessarily detailed. You can be just as vague as you want. I'll do my best to answer the question. The second question that we often get, and that is one I believe quite important, especially in the financial industry, and we work a lot with it. We work with venture capital funds, private equity banks, is the one focused on ESG. ESG is defined by, these three letters are defined by environmental, social, and governance. This has historically been a kind of way of analyzing financial investments in terms of how much they are doing for these three elements. So what is their environmental, social, and governance performance essentially means how are they in terms of their relationship to the environment, how are they in terms of in their relationship to society, and how essentially they're governing its company. If we dive deep into each one of those elements, and if we look specifically into them in more detail, ESG essentially stands for, on the E side, about climate change, resource management, waste management, pollution, or how do you contribute towards pollution, deforestation, and how do you, of course, counteract against deforestation. On the social side, we're talking about human rights. Also about modern slavery. Do you have policies in your company specifically dedicated to this? Child labor, working conditions. Are your employees treated in a nice manner? Are they working in conditions that allow them to be healthy and safe? And of course, employee relationships. Are you allowing equal value and importance to your employees' decisions and opinions versus the ones of the management? And then on the governance side, it gets a bit more focused on topics like bribery, corruption, executive pay, board diversity and structure. Do you have men, women, and are they actually at equal distribution? Also, it's related to political lobbying and donations. Is your company involved in that? And finally, what is your tax strategy? If you look at the topic of ESG, if I can give a bit of a background on the history of that, actually there's quite a lot of work that has been done historically. But over the last few years, it became a lot more evident that this is a really good framework to start thinking of when you're analyzing assets, when you're analyzing different financial classes. And what came out was actually that we have way too many different definitions of these topics. We work with venture capital funds that have 30 questions for the ESG analysis for their portfolio companies. And we work with private equities that have more than 150 questions, which shows that the level of detail of analysis is probably different, which means that the accuracy of this analysis is not necessarily the same. ESG at the moment is going, as a framework, going towards becoming a bit more aligned, and there's a few different work streams that are allowing for that. In London, there's a really prominent working group that has been set up by friends of ours, Horton Street Capital, who are working with the VCs to align on that. There's also other working groups that are related to the World Economic Forum, where the Big Four actually came out with a framework themselves to explain what should be the criteria and on which basis you should be analyzing ESG. But there's still a lot of work to be done. So whenever someone tells you ESG, always question the depth with which they're analyzing that, and also question the weight that ESG has on the total amount of the due diligence evaluation of this particular type of organization. We're getting a lot of questions now. Thank you so much for not shying away to ask your questions. Really appreciate it. I'm going to pick up just one, and I'm going to make sure I answer all of them. What standards are there to measure sustainability, especially looking at the ESG criteria? So I think I'm going to pick up on what I just mentioned with regards to the World Economic Forum. Someone from my team is going to put a link from the WEF framework. There's a really good PDF that is like more than 70, 80 pages that explains how to analyze ESG. There's other frameworks like SASB. We have an integration with SASB where essentially we allow our users of the platform to actually report on their ESG and on the ESG performance of their portfolio companies or subsidiaries or different offices even, and compare and contrast that. These are the two really prominent ones, and I also know about a few others that are not yet publicly announced related to some of the most prominent NGOs and organizations that we know are quite heavily focused on sustainability kind of measurement and this more elaborate perspective on social and governance, which kind of covers not only the E element, but also SNG, of course. The other question that I see a lot, and I think it's also been written in the comments here, is what standards are there to measure, what international carbon accounting standards are there and frameworks? So this really ties into a lot of questions that we normally get, and this is how do you calculate emissions? One of the most prominent carbon accounting standards that we have seen is the GHG protocol. This is an international body that has been able to establish a really fundamental and well-developed framework that establishes how you look at a company, not only on its internal level, but also on external level, to calculate its emissions. And the GHG protocol offers a really nice and detailed perspective on calculating emissions coming from your offices, vehicles, facilities of all sorts like warehouses, travel, commute, also investments, as well as your transportation and the use of products and so on. I'll explain scope 1, 2, and 3, that is basically the premises of this framework in a second. Another framework that is really important and is really prominent is CDP. CDP is actually an NGO, and they have been able to make their framework incredibly respected, and also one that is looked at from a lot of different corporates. They have hundreds of corporates that report to that, and what it stands for in terms of their work and kind of what do they do is basically disclosure of not only relation to climate change in terms of your work, but also forests, water. How do you go a bit level deeper beyond CO2 emissions? And they have a reporting cycle of 1 year. So every single year, a company gets to report to that. And depending on how well they perform and depending on the data that they submit, they get an A, B, C rating. And of course, this changes on a yearly basis. We work with quite a lot of companies and we support them on their CDP reporting. The reporting actually is in 1 month. So if anyone is considering looking at that, get in touch and we're more than happy to tell you how it works and how we can also be of support for the Carbon Disclosure Project certification. Another one that I can cover, because there's a lot of them, there's kind of a subsection of the GHG protocol, or at least it's approved by the GHG protocol as a framework in terms of the reporting, is one specifically related to financial institutions, and that's PCAF. PCAF is a framework that has been existing for a few years, but then it became incredibly prominent last year, when more than 400 banks signed up, a lot of asset managers and so on. And it looks at financed emissions. So these are essentially the emissions that a company puts money into, and then kind of how do you translate this financial data into CO2 emissions. And I can go on and go on. I would recommend you look at EU taxonomy, TCFD, SASB, also ESG as a framework, GHG protocol, as well as B Corp. We support as a company with our platform all of these reporting standards, and we automate the process of reporting for those of you that don't have context about what Plan A exactly does. Going into the next questions, thank you so much all for the many questions. It really makes me happy to see how engaged everyone is with the topic. Where comes Plan A emission factors, conversion factors from, and how do you estimate the carbon emission cost indicators knowing the price change from country? So thank you, Marcello, for asking this question. Plan A is actually really happy to be driven by science since day one. We have a full-fledged scientific team that is actually the one that is defining a lot of let me just maybe make it a bit more clear. So let's show this now. This is the question from Marcello, and now I can cover it a bit more properly. The emission factors of Plan A come from the fact that we have a scientific team in-house. Plan A, since day one, has been working with scientists in-house, people that have expertise in carbon accounting, life cycle analysis, carbon emission assessment, also sustainability strategy development, decarbonization. All of these people work in Plan A, and that has allowed us to have actually local conversion factors, which is really specific. Normally companies that do carbon accounting and assessment use European averages or world averages, which makes the calculation very inaccurate. We have always promised that we're going to be focused on accuracy as a company, and that helps us really have the best impact for the company, but also the best impact for our planet. And that is where we get them. We spent close to 1 year just collecting conversion factors on a local level, and we're now able to cover the whole planet, which is really exciting. How do you estimate the carbon emission cost indicators knowing the price range changes from country? Plan A doesn't work only with spend-based method, which is why essentially when we convert data points, it's not always converting money into CO2 emissions, which allows us to work against this the discrepancy on a country level and be accurate. So going on to the next question, there's a lot of questions about the okay, now this is a perfect question from Simon. When you talk to different companies, how familiar are these companies with scope 1, 2, and 3 emissions? Which people do you normally speak to? And what is the main challenge in emission calculation? Simon clearly had a lot of questions and put them all in one. I'm going to start with the first one, which is related to scope 1, 2, and 3. So going back to this framework that I was mentioning, the GHG protocol, the GHG protocol defines emissions in 3 scopes. Scope 1 is the emissions related to vehicle fleet, facilities of a company, its offices, and so on. Scope 2 is related to purchase services related to heating, cooling, electricity, and so on. And then scope 3 is where you look into a lot of different diverse factors that are different for every industry. We're talking about investments, transportation, commute, travel, data centers. We're talking about the materials that you use and who are these suppliers. So this is scope 3 category 1, purchase goods and services. And essentially, all of these categories, they're defined and they're incredibly useful for anyone to use, but they're different according to industry. So scope 1 and 2, more or less in most of the cases, are kind of the same across industries, but then scope 3 is really different. And this is where we specialize as a company. Plan A specializes on scope 3, especially on complex data assessment. And what we normally meet in terms of a challenge when we work with companies is that they want to become sustainable. They want to follow the right tracks. They want to be transparent. They don't want to do greenwashing, which means that they really want to go through the whole process of data analysis, but they don't necessarily know about scope 1, 2, and 3, some of them, which means that we need to explain the concept and then start going on the journey with them to automate the process for data collection and then analysis. So The people that we normally speak into a company is the chief sustainability officer, risk officer. We have heads of ESG, chief impact officer. We work with a lot of heads of sustainability. We also work with, again, the risk teams, also with the IT teams, because of course there's a lot of integration, and in the corporate scene, there's actually quite a lot of need to automate processes, because imagine having to put a company on our platform and getting them to use manual processes. Probably that's not going to be the best user experience. So we usually work with these people, but that's only the starting point. As our platform is actually quite elaborate and detailed, and it has different modules, and it could encompass the whole organization, normally there's like many users that essentially allow for the data to be collected, for the decarbonization strategy to be implemented, and essentially allowing for this to become quite of a well embedded into the organization process, which sustainability should actually become, if we look at kind of the future of sustainability. The main challenges when it comes to calculating emissions is, of course, Scope 3. This is why we specialized on that. This is why we spent more than 1.5 years specifically developing functionality related to third-party data collection, integrations, APIs, and a lot of different complex technological kind of developments that allow for this data aggregation to be happening. We also have spent quite a lot of time on complex data assessment, which essentially allows us to really be good at analyzing the Scope 3 data that normally is kind of the biggest challenge, and actually what's most important, because if you look at a company like an automotive, more than 98% of its emissions are sitting in Scope 3, which means that essentially there's quite a lot of work to do with these third-party suppliers, transportation, end-of-life treatment, and so on activities. More questions coming in. Thank you so much. So the next question that I see that is anonymous comes from the topic of ESG and yearly reporting. I can answer a bit more metaphorically to start with. Sustainability has historically been something that is outsourced. You call someone, they calculate your emissions, you do some offsetting, and then you're done for the year. And I think this is where we have gotten it wrong, because actually, if you look at the state of our planet at the moment, the main reason why climate change is at this state where it is because we have not accounted for the environmental cost of our action, which means that on top of all the financial KPIs that we analyze as businesses, we need to really be looking into the environmental cost of things that we do. We're really proud to be working with companies like Gani and also financial institutions that have decided to deeply embed sustainability into the organization, which means that they're incredibly excited to be collecting all the data and working towards, of course, the yearly reporting. But they're also looking into, on one hand, decarbonization, and then on the second hand, they look into more frequent reporting to themselves to start with. And from 2 years from now, there's going to be actually a requirement to be reporting to the governments on a quarterly basis. So with this in mind, companies should not focus on only the yearly reporting, but really focus on developing a sustainability culture in-house, where sustainability becomes part of the decision-making, when sustainability becomes part of the decision-making related to the KPIs that you look at. And what this requires is looking into your data on quarterly, monthly, daily basis. Our system allows for that, and some of our clients do that. Majority do it on quarterly or monthly basis. The second thing that you need to do is really to get your team engaged and get them to be part of this decarbonization journey that you need to be on. I'll cover in a second why it matters to be focusing on decarbonization, but to sum it up in a nutshell, when it comes to yearly reporting, yes, this is really important. But if you really want to be a sustainability pioneer, and at this stage, actually, for so many industries, there's an opportunity for you to become one by really taking the front line and defining a strategy that is really incredibly innovative and incredibly ambitious for decarbonization. You can claim that and you can do that, but that would require you also to be focused on really being more frequently looking into your data and starting to understand what is the environmental cost of doing your business. Going on to the next question that I'm seeing that just popped up, and I think it's really exciting one. It's one that I also get on a personal level asked a lot. Thank you, Ajay, for asking this question. Do you think everyday habit can make a difference? The answer is yes. And the reason for this is that we all together are contributing a lot to climate change with the billions of choices that are being made and the ones that are not even considered essentially in terms of their total impact. And I'll give one small example here. I'm assuming many of you have heard of the plastic patch in the Pacific Ocean. This is, if you just Google this term, if you just look up this term, what you'll see is that this is a big collection of a lot of the waste that we humans have been creating on daily basis. There's pieces of laundry machines, there's pieces of shoes, straws, and different jugs and so on, like different little elements of human existence. So when you look at this is actually a compilation of billions of choices that have been made by each one of us, which means that today, if you decide to not take a plastic bag or a plastic bottle from the supermarket, you're actually working towards changing the larger picture. Of course, it feels like so minimal when we look into the big challenge of climate change and all of these big industrial choices that need to be made and improved, sure. But at the end of the day, you as a consumer could be influencing with the way you purchase, with the way you invest your money, with the way you go to the supermarket, the way actually climate change ends up developing. Because the only reason why many companies today are launching their sustainability lines is because you made the choice yesterday to not buy a piece of clothing made from polyester, but one that is made from organic cotton that has been sourced in a respectful to the people that have been doing the work to source the cotton manner. Really fantastic questions. Thank you so much. And we're going to make sure that this also goes on our academy so that you have the opportunity to also read through this. And for the next live that we do next month, you can ask further questions. And hopefully together we're going to be deepen all of our knowledge base. We still have a lot of questions to cover, and I'm going to pick one that is definitely a favorite of mine. What is greenwashing and how can we move away from it? Greenwashing is the concept of using your environmental commitments as a marketing stunt without actually at the net of the equation of your effort, the planet benefits really. An example of this would be, I saw yesterday and I was quite shocked, there's this new type of paper bottle, and not the ones from Carlsberg and a few others, Heineken and so on, that released, but just like a company that released a bottle in Asia that when you cut the bottle, inside there's actually a plastic bottle. This is greenwashing. And what this means is essentially that you use maybe the fact that now sustainability is quite trendy and there's a lot of companies wanting to do something sustainable. It's just an opportunity for you to make yourself a bit more understood as sustainable, but you truly do not necessarily mean it with your actions. Greenwashing is really problematic because the European Commission actually estimated that more than 50% of the net zero commitments that have been made up to date have actually not been backed by science. Science matters in this particular context because it is our foundation, it is the ground on which we need to be sitting on when we calculate emissions, when we set some agendas, when we pick offsetting and so on. There's been a lot of questions about offsetting, so I'm going to cover them after that. But what greenwashing stands for is actually the marketing stunt that doesn't do any good for the planet, you know, where you make a massive campaign that you're going to be planting hundreds and thousands of trees, but then actually you are traveling with a private jet on a weekly basis, which essentially eliminates the positive impact that your company has done. How can we move away from it? Well, this is a really important question, and it's one where we as Plan A have been addressing by the fact that we have a big focus on science, We give a lot of detail on the methodologies that we use to our clients, and also have a very transparent approach to the data that we use, also the approaches that we use. And whenever we work with a company, we also make sure that we work with them first before the claims and these kind of comments start happening. We think that there's many ways in which you can engage yourself with the topic, but the most important as a company is to really focus on not outsourcing sustainability to someone that maybe makes an inaccurate calculation and then gives you some bad quality offsets, but really starting to understand at the core of your organization, what can we do better to reduce our emissions today? And then how can we communicate it so that we show that we're going on a journey, rather than focusing on maybe saying that today we're the most sustainable company, we're carbon neutral, and all these kinds of things that really don't matter in the bigger perspective of what our planet actually needs. Now, so many questions, and we only have 10 minutes. Thank you so much. This is really exciting. So this question is really important. When can one actually say that a product is carbon neutral or sustainable? Are supply chains, etc., already transparent enough to be able to analyze this? This is an incredibly good question, and the truth is that we as a company shy away from the carbon neutrality claims. We don't give this title to any of our clients because, or we don't offer this as a service, because to be able to calculate in detail scope 3, that takes a lot of time, and that takes a lot of assumptions for some of the companies that you might see working on this planet. And we're really good at calculating scope 3, but actually, if you look at the concept of carbon neutrality, it really doesn't do anyone good, because carbon neutrality actually allows us to maybe feel comfortable that, oh, we've done now what we needed to, and then now we can focus on doing business as usual because we got this stamp of approval because we compensated our emissions. For those of you that don't know what carbon neutrality is basically when you calculate your emissions, you buy carbon credits, and then basically you compensate. You eliminate your emissions by the fact that you've bought a carbon credit that is compensating for the negative impact that you had on the planet. When it comes to products, carbon neutrality, unfortunately, is still not the legal terms of carbon neutrality are going to be set only within the next 6 months, which is great, because finally there's going to be some legislation around all the greenwashing that is happening on that topic. But what this legislation is going to be focusing on is to make sure that the full scope 1, 2, and 3 is calculated when someone claims carbon neutrality. Until then, any carbon neutrality that you claim about should be questioned, because what we've noticed with companies is that some claim carbon neutrality without calculating scope 3. And that is totally not okay. Or calculating scope 3 and then essentially looking into using averages. So really not going into the depth of the analyzing the data coming from these third parties related to transportation, logistics, end of use. And when it comes to physical products, it's really tricky. So if you're analyzing and finishing off with this, a product and how carbon neutral it is, probably focus on the products that really have been able to elaborately explain to you where do their emissions come from and how they are working towards being on a sustainable journey. And that is not necessarily only about switching your energy to a green energy provider. It really is focused on what kind of sustainability culture they're embedding into the way they educate their customers, their suppliers, and their employees. So moving on to the next question, because we still have so many questions. I'm taking this one. How do you build sustainability strategies with your clients? So we are not a consulting company, we are a tech company. So what we do with our software is that we engage companies on 2 levels. First is with the carbon accounting focus, where we calculate emissions related to scope 1, 2, and 3. And this happens through a lot of integrations, APIs, as well as a lot of prediction capability where data is missing. And then when it comes to the strategies, we have a team that focuses on decarbonization in-house that has been able to develop functionality on the platform that, based on the worst performing indicators of a company, gives indications on how you can go on your net zero journey. The net zero journey is defined by different pathways for reduction that are different for every single industry. We work with a lot of different industries: fashion, fast-moving consumer goods. We work with financial institutions, a lot of them. We work with automotive, e-mobility, also with some foundations, and so on and so on. So for all of these different institutions, we have pathways on how they can achieve sustainability. So these strategies are embedded into the product, and you can track and trace what you've been able to achieve. You can delegate to different people the particular tasks, and also ask people for their input, and kind of set up this agenda so that it drives internally this culture of sustainability, but it really moves the company to become this pioneer of sustainability. And maybe just here adding a little comment on why does it really matter to focus on decarbonization, or why us as a company have been focusing on this as in particular, is because if you look at climate change and the climate data science analysis, you see that nothing is going to really be able to help us, even if we have, a lot more years of COVID-like situations. Nothing is really going to be able to help us. No carbon neutrality, no nothing, offsetting and so on, but only reducing our emissions. And with this in mind, we need to heavily start decarbonizing our industries. And to give you a perspective, last year when COVID was happening, we only got a total amount of reduction of 7% in CO2, which is mind-blowing, because we all felt like the whole world stopped and nothing was going on, and probably we would have been like by 50% reduction in CO2 and so on. The truth is that we weren't. We were actually only at 7%, which means that business as usual was happening, all the production facilities were working, and that essentially was one of the reasons why today Plan A, and for the last 5 years, Plan A has been focusing on helping businesses to really focus on nailing down their decarbonization strategies and making this part of their value proposition in terms of being the prominent player on the market, focusing on this. So whenever you think about your company and what you could do as a company, focus on what is really going to lead to carbon reduction. And it's a nice thing to do, maybe social impact projects that go outside of your organization. Surely this is really engaging and it's really exciting, and it can get your employees to be joining the cause of sustainability in your company. But if you look at the big picture, what really matters is actual reduction. Policies in your company related to travel, policies in your company related to the suppliers that you pick, and also really focus on decarbonization, no carbon neutrality, and so on. I see we only have 4 minutes, and I think I'll just take the question that is again on offsetting. This really has been quite of a prominent question that we get from our clients, and I think is an important one to cover. Our view on offsetting is a particular one. We do have project developers that we work with, but we also work with carbon capture. We also work with social impact, sustainable investment organizations. So whenever a company decides to go and support external organizations, once they've started doing their reduction as a company by working with us, we also give them a whole palette of options that they can pick from that is quite diverse. And the reason for this is because offsetting at the moment is a very commoditized industry, is one where you can find a carbon credit for €3 and you can find a carbon credit for €150. And the quality is really different on all fronts. You have really high quality carbon credits at €20. You have carbon credits that are €7 and are incredibly bad, even damaging for the planet, because they don't account for actually their impact on the community, on the ecosystem, and so on. So with this in mind, we take offsetting with a pinch of salt. We offer it, but only by having the opportunity to work directly with the people on the ground, which means that we really understand what is happening with the impact, how the money used, what is the background of the team, and so on. We only have 2 minutes left, and I think when it comes to all the questions that we're getting, I'm so happy and so grateful that all of you are incredibly engaged. we're doing these things on a monthly basis, and I would hope that with these sessions we can educate you about carbon accounting, about sustainability into a company, decarbonization, and also bring in scientific experts as well that would allow you to understand how this topic at all should be perceived on a corporate level and should be also developed in your own organization, which I'm assuming is not necessarily always the most important topic. You know, sustainability is still popular one, but not necessarily the one that everyone focuses on. So thank you so much for joining. I'm really positively overwhelmed by the amount of people that joined, and super happy to be seeing a lot of new faces that are not familiar to me. It gives me hope that we're doing the right job at Plan A. Send me all your questions. We got a lot of questions since the last time, which were showing that you really want to learn about Plan A, about our product, about the clients that we work with, how we help them on decarbonization. And we see each other in a month. Thank you so much.